Alright, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's January 11th, 2023. I said 2022 in my last video. It's going to be hard to shake that one off, I think. But we've got a big day tomorrow. I want to do an extra video. I'm going to be a little bit more low-key in this video because I live in an apartment. I've got neighbors. It's late at night. It's actually 11:10. And this is my third take of this video, trying to get the microphone settings appropriate. So big day tomorrow, and I just want to lay out everything that I think we should be paying attention to. If you're going to be trading these markets, this is everything I think you should know that's going to give you a good perception of what to expect. If there's anything I missed, please do, or if I should be corrected, let me know in the comment section down below. And I appreciate you guys being here. I appreciate the likes and all the support. So with that, the numbers tomorrow, I mean, this market is just driven by data. The data is the most important thing right now. The CPI numbers, are we going to rally off of that or not? Are they going to be able to get CPI? I think their target headline CPI is 6.6%. Are they going to be able to do that? That is that's the main question. And you know, a lot of people expect like this pivot from the Fed or something if inflation is cooler, but think about all the interest rates and all the time it took to get inflation from like 9%, which were the highs, down to 6%. I mean, it took months, and it took serious rate hike, 75 basis point rate hikes to accomplish this. So thinking of that, what's it going to take to get inflation down to 2%? I mean, the Gouls are being asked during their Q&As if they're going to raise the target. Jim Bullard was asked this. A Goul from the EBC at the symposium in Sweden yesterday was asked if the EBC would raise their target range. What's it going to take to get this inflation down? And we're seeing inflation sort of move from the products, the physical products, to the services sector. A lot of service prices are elevated. They remain elevated. So are we out of the woods yet on inflation? I think it was Chuck Barone, really great commentator when it comes to these markets, straight down the line, not a lot of political opinions, but he said that the lower the number gets, the slower the grind down is. So I don't think we're out of the woods yet, and it wouldn't surprise me if the inflation doesn't come in cooler, but we'll see. We're just going to have to see how this plays out. I don't have any overnight positions. I'm just going to be watching this pre-market action. The jobless claims as well. As fucked up as it sounds, we want to see more jobless claims. We want to see the continuing claims to remain elevated. That would be good for the markets. It would also indicate that the interest rates are having somewhat of an effect to cool down the economy. So I mean, I'm concerned about Americans. I'm concerned about the consumer debt, and I'll talk about that, the student loan debt. But yeah, basically, if you want to see these rallies, we got to see these jobless claims and these payroll numbers this month come in worse. How are the bonds going to react to the data? And not just in the short term. We got to watch this months out. We still have the yield curve inversion with the shorter term bonds being higher. The yields being higher than the longer term bonds. On the surface, it looks like that's telling us that we have this big recession coming, and just total destruction in the short term. But are the bond yields telling us what we think they're telling us? And I'm going to be watching the short term reactions. Do the bond yields go up or down? Do the prices of the bonds go up or down on this CPI report and on these jobless claims? We're in this sort of state where if the bonds get bought up and the yields go down, and by the way, we've had tremendous moves in yields all year, right, the past year, but when the bond prices go up and the yields plummet, we're in this sort of state where that does help the stock markets, and the stock markets rally off of that. But that's not always the case, and when that changes, trading strategies have to change. So all this you got to think about. The currencies. The main ones, obviously, the dollar, the euro, the pound, maybe the Japanese yen. But the euro has been gaining not only against the dollar, which is not that big of a deal, but also against the pound. And I'm concerned about the people in the UK because their currency is not keeping up with inflation. It's not keeping up with their wages. A lot of people are unhappy. They're going on strike, even worse than the strikes in New York City. The UK is in serious trouble. If they can't get a rally in their currency, I don't know. They're just on their own out there. This tiny little nation that has less and less influence every single year, not only politically but economically, with monetary policy. And there's some trillionaire in the Eurozone that's shorting the pound. I mean, somebody is trading these pairs, and somebody's shorting the pound. Is their currency being attacked for political reasons, right? Geopolitical reasons? Are the banking cartels here trying to just destabilize that country, the UK? These are all things I'm thinking about. But on a little bit of a lighter note, the Mexican peso has been rallying against the dollar. The Mexican peso has been kicking the dollar's ass the past couple of days. So that's a good thing. I mean, obviously the dollar is worth more, but it's good to see at least our local currencies here in North America strong. Commodities, oil. We got oil still below $80, right? If oil can get above $80, then maybe we have a rally, for the crude oil prices. But anything below that, there's not a lot to talk about. With the metals, the stars right now are gold and then copper. Copper is at like 8-month highs. I think the reasoning behind the copper rally has been a lot of this green talk from the global elite. We had the green agenda mentioned several times at yesterday's symposium in Sweden, where all the central bankers met. We had Biden, Trudeau, and the Mexican president meet in Mexico last night at the border. I think it was on the Mexican side. A lot of talk about green energy, from Biden and especially Trudeau. The green transition. You've got the ECB talking about green monetary policy at the symposium. I mean, how a central bank can transition us into green energy kind of doesn't make sense to me. They're there to provide money, liquidity, and be the buyers and lenders of last resort. But they want to revolutionize the economy, I guess. It's very sci-fi. It's very futuristic. Are they going to be able to accomplish this? But copper is going to be a much needed commodity. So we've talked about the demand with oil, the potential demand coming from China for oil. If this green energy talk, continues to escalate over the next year, I think copper prices will look pretty good. Consumer debt, right? I mentioned it earlier. Very concerned about this. The consumer debt is exploding. The student loan debt they want to wipe out trillions of dollars of that. If that were to actually go through, that would be just inflationary beyond our imaginations. And Americans are really struggling. They're taking on more and more debt, and the cost of money is getting higher and higher. So it's not a good scenario. Jamie Dimon, though. This is actually, I guess, some good news. He's backing down on his hurricane comments from a few months ago. I think it was back in November, where he said that he was predicting an economic hurricane for 2023, and he's backing off on those comments because a lot of people are expecting the inflation numbers to start looking better. A lot of people think we're out of the woods, and if Jamie Dimon is wrong about that, and we don't have this complete meltdown in our financial system, then he's going to look a little bit foolish. Maybe not as foolish as Kevin O'Leary, but so he's walking these comments back and basically agreeing with Powell and saying that we could have a soft landing, all this kind of nonsense. So we'll definitely be checking for Fed and ECB comments. Anything hawkish could really take a lot of the steam out of these rallies, so keep that in mind. Friday's bank earnings. All right, this is another big data day. The banks are kind of like the canaries in the coal mine. All right, if fourth quarter profits for the big banks and the corporations are weaker in 2022 than they were in 2021, that is just going to mean so much uncertainty for 2023, and I don't know how the market's going to take that. So I'm going to be watching JP Morgan, Citibank, Bank of America, Wells Fargo. Are these banks even solvent? There's a lot of rumors about bank runs, and I'll get into that in tomorrow's video. But the last thing I want to mention here is telecom. Just go look at T-Mobile's chart. I don't own any T-Mobile, but look at T-Mobile's performance, and then look at Verizon and AT&T, and then think about the fact that we're in a bear market. T-Mobile's performance has been amazing. So I will leave it there. You guys let me know, how you think this is going to play out. If I missed anything, comment down below. I thank you for being here. Give the video a like. Follow me on Instagram. Subscribe to this channel too, but follow me on Instagram at Millennial Trades. That's where I'm going to post all my actual trades and the charts and everything, so you guys can see what I'm up to. And as always, until next time, I'll see you on the next video.